Steve, how are you?
Great. Thanks for having me. Good to be
Hey,
back here. And sorry to hear that Dale is not going to be on, but at the same time, great to work with you. And I hope that he's going to have a good, relaxing time.
yeah, he's like I said, he's gonna park himself kind of close to the beach and enjoy some of the ocean weather and get out of Central California, which is, it's boiling hot over there. So Steve, nice to have you back here. Thank you for joining us here on the Face Show. Since this is my first time speaking with you, even though I've heard you a few times over the years. Why don't you tell everybody about what you do? And let me pull you up on Twitter here. So you are Ask Slim, right?
Correct.
Okay, let me bring you up.
That's me.
So tell us a little bit about hello, where that I'll pull you up here, but tell us a little bit about you.
Okay. Great. Yeah. Well, I've been around for 50 years. And actually, it's 51 years. It was 1974 in May that I became a trader on the Chicago Board Options Exchange. And so I did that for decades and then became a fund manager, off the floor trader, did a lot of things, including 11 years ago, became 12 years ago, became a show host on the Tasty Trade Network. And that kind of led me into doing my own site, which is AskSlim.com. And the approach to the markets that I take, I really learned back 50 years ago, which is cyclical analysis. Essentially, I look for the rhythms in the market, and then we apply our own proprietary studies to those and really get a sense for momentum conditions. So, between using our studies and analyzing the money flows, in a visual way, we get a very, very good sense for market conditions, market directions. And it's an approach that I've used for 50 years. And now I have a team of four analysts and a very, very big following. And the site that we have is a membership site with many different levels, just depending on the type of trader that somebody is. And if you give me
Awesome.
the screen, I will then show the front page to our site.
There you go.
And okay, let me just share right now.
So as you're getting things together, tell us how you feel about the markets where we currently are at. I mean, this has been one hell of a rally in equities. You've been around long enough. I've been trading for 3 decades. We've traded through ups and downs in this market. And this market's been, we were just discussing the pain trade has been higher and looks like we're going higher from here. How do you feel about where the markets sit currently, Steve?
Your references to the stock market, of course, right?
Yes, I'm
Okay.
I'm I'm sorry. My
Yeah.
references to like the S&P and just
Right.
broad markets, just broad
So,
equity
so
markets.
I'm gonna move into the S&P 500 here. You should see my charts right now.
Yep, I could see them.
Okay, great. So, I'm bringing up a weekly chart right now, and this is a typical way that our charts look, where we have the cycle brackets on the bottom, which is essentially just a drawing tool and gives us a sense for market rhythms. And if you look at the movement in the market, you can see in here that there's an important low right over here, and a low right over here, and then a low right over here. So when, last time I was on here, I talked about the fact with Dale that I thought the market was going to have a lot of trouble into 2026. I still believe that to be the case. But you can see in here where this upward turn came in these cycles after this low. And I had talked about, 5,100 at that time is where I thought the low would be. Of course, we got into the tariff panic at that point, and we were in negative momentum. This is our reversal scout right here. And the scout just turns up right here and tells us we're moving into this next upward phase. Where are we right now? Well, this is very important because the time frame that this rally used, and that's this whole cycle right in here, the minor cycle, is coming to a close. In other words, there's likely to be some sort of a corrective period in here in these next few weeks, and then a further rally, as you can see right over here. There's important monthly extension levels, and that's at about 64.70 right there. So that would be the upside of what I'm looking for. You call this the pain trade. Actually, this is just, for a lot of people that expect the markets to turn back to the downside, of course, that is a pain trade. And the with all of the news that we've seen in the stock market, that would be reflective of negatives, where we hear the tariff situation, which is on and off all of the time. You never know what to trust. And the news that came out of Israel and Iran and everything that could be deemed as
Yeah.
negative, the money flows just kept coming into the stock market.
And
Uh,
Steve, I want to just interrupt you like with a comment that, and I want to get your opinions here. I mean, I was talking a little bit about it. I'm not sure when you popped into the show, but you have all of these macro analysts. Like I won't badmouth anybody here, but on publicly, but you've seen them all. I mean, they're pranced around CNBC, Fox Business, yada yada yada. They have their newsletters. Everybody's been looking for a recession. You have this massive negative like outlook on the economy, the markets, but that produces hesitation. I mean, when you're you're a fund manager that's got $500 billion in assets, and you subscribe to all of these these macro people that are telling you that the world's basically going to come to an end, and you hesitate, but now you're underperforming broad-based indexes, and now you're kind of forced to chase the market because following Liberation Day, I mean, who trusted the market then? Who was the buyer after the 20% correction when I'm talking about big money? You got a lot of them that were just been kind of sitting on the sidelines, but now they're kind of forced to chase the market higher. How do you feel about that? That's when you talk about the pain trade. So how do you feel about that like concept, that idea?
Well, I mean, the idea is that many fund managers are underperforming, and they have to find a way to perform. And
Right.
that's actually what often brings the rotations in the markets that keeps bull markets alive. And that the conditions that we're seeing, I believe, are that right now, where we have I think a switch to where the breadth figures are starting to show that money is moving into some of the lower tiers, second tier, third tier, and the mid caps or the low caps. And I show you that in a second, how that's starting to happen. So what we're looking here on the weekly chart on the S&P 500 is that it's likely to have some sort of a pullback and then move up again. And this is what it looks like on the daily chart. I heard you talking about the Elliott wave counts. We don't look at Elliott wave, we look at cycle rhythms. And you can see in here the nearly perfect 18-day cycle rhythms that are occurring right now. And this is also upward momentum that we see here on the bottom here, showing the upward momentum. And that all is a lot of strength. Now, what I want to look at in here is the MDY. Which is the mid caps right over here, which were greatly lagging the market. Now the construction that we see here in these cyclical patterns is quite negative and is pointing to the fact that we're likely to be getting an upward lift in the markets from this second tier, from the mid caps right there, which were lagging the market. You can see that here, well behind where that high was that we made here last year in November, December. And I think that that's what's really going to fuel the market and the S&P 500 to get to higher prices before we get into what I think is going to be a pretty strong downside corrective or bear market period into next year.
No,
So yeah,
I know you talk about cycles, and it's funny. You're like, oh, I don't look at Elliott waves, but I look at cycles. It's like, but we're still both targeting around the same area. So if I see a nail and you see a nail, and I hit the nail in with a hammer, but you hit it in with a shovel head, but we still get the nail in, it's all
yeah,
good, right? Right?
yeah,
All
that's
right.
right.
So when you what could derail your thesis here? What do you think? Like what's the risk? As a trader, I'm always asking what's my risk before I even get into a trade. So, what's
Well,
your risk and your thesis here?
I think the most important thing to be considering is that interest rates look like they're, and the dollar, both of them, and they do often move together, do look to me like they're going to be moving lower. And historically, the biggest declines come in interest rates when the stock market is falling. So if I'm looking for, and I'm going to switch over to the 10-year yields here so you can get an idea of what I'm looking at. Um, the 10-year yields on this weekly chart, which have really been very range bound that you can see in here on the cyclical patterns. The cycles are very good here. And the failure here that we saw below these levels in yields and the downward turn in momentum in yields is suggestive that we're likely to get some sort of a downside move here into Q4 of this year. If we get into a period where yields are falling sharply, that's going to be reflective of negative things in the economy. That's going to start giving you downgrades in earnings, and it's going to start putting pressure on the stock market. So the yield situation looks to me to be negative. And when I switch over to the 10-year futures in here, uh, sorry, the 10-year futures look like they're about to finish this pullback, as you see here, and then begin to move up again.
By
So
the
we
way,
have a
we do have a 10-year auction today too.
Yeah, which tends to be just a short-term blip in the markets. As you can see, I'm not exactly sure which of those lows is the going to be the low that sets up the next rally, and that's based on the daily pattern that we see right over here. But we look like sometime here in end of July or August is going to be the beginning of an upward move in the treasuries. And that would be suggestive of the downward move in yields. And again, as I say, that would be very reflective of the likely continuation of the downward move in the dollar. And here you could see very negative conditions in the dollar. When I was here with Dale, talked about that back early part of April, and the massive failure in the dollar and the very strong likelihood it's going to move down under 95. Those are all symptomatic of what could be very negative conditions in the U.S. economy. We're
Speaking
not.
speaking of, can I ask you this? Speaking of the dollar, I mean, the dollar pretty universally bearish. I mean, you it doesn't matter where you go, and what bank analysts you read. Everybody's targeting euro to 120, 125. People are, like I said, universally bearish the dollar. Do you see any signs of life here at
No,
these
not at
levels?
all. As a matter of fact, when I look at this is an intermediate term, and this is our momentum conditions are certainly negative in here. When I look at the shorter term here on the daily, we're in a bounce right now, and it's just a tiny little, barely perceptible bounce in what is supposed to be a rising phase. Once it gets up into these areas, a little more time passes, it's very likely to be moving back to the downside again. There's nothing in these patterns that are anything but negative. This is our proprietary momentum indicator here called the slim ribbon PO. And you can see once you get these downside arrows right in here, you get these accelerations to the downside. Well, another one is about to come right over here. So the dollar really looks to me to be in bad shape. There's no reason to believe that there's going to be any strength coming into the dollar other than minor upside ticks. And if you look at the, historically, you need to get money flowing to where it can get a better return. It certainly cannot get a better return here in the prospects of the of U.S. interest rates where they're likely moving. They're likely moving to the downside. Compare that to, even though Bank of Japan is probably not ready to raise rates again, they're likely to do that. Before you know it, what is I consider to be a very bearish condition in the U.S. dollar versus the Japanese yen. Put that up right over here. This is look at the size of that massive head and shoulders top that you see right over there. I think we're going to get that break below that 140. And if we do, it measures down to 117. So the combination of potential higher rates in Japan, potential lower rates, and the slowdown in the economy in the U.S. is likely to bring a collapse in this particular pair. And certainly the US dollar, the Dixie, is not going to survive that. And we're likely to see much lower prices in the U.S. dollar moving into next year. So that all that scenario and all the scenario for lower interest rates is not positive for the U.S. stock market. There's just a lot of correlations in here that line up for me that there's going to be a negative period and likely a bear market into 2026 in U.S. stocks.
Yeah, I can't really disagree with that. But what happens between now and 2026, it's going to be interesting to see if we can see that. I know you're looking at 6,400 and the S&P. I'm looking for about 6,550 or so. It's going to be interesting to see if we can stretch our legs all the way up there. Hey, one last thing, because I know traders are really, curious about what's happening in the gold market. Do you do analysis on gold?
Sure, I do
Okay.
analysis on 24 different futures contracts. So
Gotcha. Okay. Well,
here,
gold's been a little laggy recently, and everybody's looking at this really critical level of support around the 32.95 to 32.50 level. What are your thoughts about gold longer term here?
well, here's the gold market. We are still very positive on it. It has turned sluggish in here, as you say. It really got so far ahead of the metals markets as the fear of tariffs and money flows, gold flows out of the U.S. and other into other countries really brought a huge demand as the BRICS started to get developed and they were, China and other countries buying a lot of gold. You can see right in here as the momentum has turned over. That's that red arrow there showing us that it's really starting to lag in here. The conditions are weakening, and it's still not in any trouble. And our we were looking for a move over 3,700, which still could be happening. However, when I look at the shorter term chart right over here, if gold were to break 3250 area right there, it would give us a pretty negative warning. And you can see right in here as our slim ribbon PO is giving those negative signals. After all of this positives that we've seen in here, positive to neutral, now it's turned negative. This is a reason to be cautious. It was some months ago that we turned positive on silver versus gold, and that has proved to be correct. And I still think that's the case. That silver will continue to outperform gold right now. Of course, we see what's happening in the platinum and copper market. Platinum just absolutely had a massive breakout. And copper now being affected by this tariff situation. Are we really going to get a 50% tariff on copper imports to the U.S.? I mean, we don't really know what's real ever on these things, but if that's the case, well,
Right.
U.S. copper is going to be very expensive relative to foreign copper, which won't be able to come into this country. So, the all of these other metals, and see you see the gold in there that is just wavering. And if you look at the comparison in here in silver on this, let me just go to the weekly chart right over here. Silver, which looks to have a correction, is still very positive right there. And on the daily chart, still very positive, as you can see. If I look at platinum, and all of these comparisons are really valuable versus the gold market. Platinum there on the daily chart getting ready, in my opinion, to explode to the upside any second in here. The weekly chart just extraordinary positive as it broke
Wait,
out of
wait, wait.
those
I can tell my
levels.
wife that her ring is in platinum now. I've been telling her it's been in gold for the last 20 years.
Yes,
I
you
can
can
tell her
tell
it's
her the
actually in
truth.
platinum.
You can tell her the truth right now.
Okay, great. Good. Thank you very much. I'm glad to know.
And you
All
can
right.
see this copper movement here blasted up to that 100% extension. That's right over there at the
Yeah.
top of that blue area. And still, there's no reason to think anything other than it being positive. Look where it turned positive right over here after making this diamond, just like silver did, and then turned upward. So all of the indicators have been pointed to the upside on these metals. And when you look at that versus again what you look at in gold forward slash GC, you can see that gold is just starting to just be a laggard and languish in here. And it's very likely that this will continue, that you'll continue to see gold struggle while these other metals are much stronger.
All right. Well, Steve, I really appreciate your updates on the metals market and really all the markets, and want to thank you for spending your time with us and the ForexAnalytix community. Once again, before we wrap things up here, can you show people how to follow your work?
Sure. All you have to do is go to AskSlim.com. And we have membership sites in here for all different levels of traders. Essentially, the charts that I just showed you, you can have static versions or live versions depending on the platform that you're on. And the level three just about gives you everything that we offer in here as far as analysis goes. I have over 1,000 videos in here that I and my team have created, and we are about to launch Slim AI, which is essentially been built in a way that it knows everything that I've ever known. It's just absolutely phenomenal. So it's essentially my legacy, as it can teach just as I have. Great mindsets, processes in there, and if want to work on your trader psychology, I have like 30 or 40 videos that relate to that in our video library, over 80 tools for text videos. So just a great place to come and learn. And we have a support team and a Discord channel that is fantastic. 4 different analysts in here that are bringing work to you all of the time. So it's a great place to come. Go to AskSlim.com.
It's almost like Ask Jeeves. You remember that one?
Yeah, I do, as a matter of fact.
All right. Well, Steve, thanks for joining us today. Best of luck through navigating through all these tariff headlines this week. And traders, I want to thank you all for being with us today. If you're in the ForexAnalytix community, I'll see you on the morning edge in about 15 minutes. Have a great day. And thank you, Steve, once again for joining us.
Sure thing. Bye-bye.
All right. Have a great day. Thanks, everyone. Bye-bye. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.